This is the Marketplace Morning Report. I'm David Brancaccio. The debt of U.S. consumers went up by $40 billion May to June. People are borrowing so they can keep spending amid prices that are outpacing bumps in their paychecks. And the U.S. Central Bank is raising interest rates, which can make paying back that debt more expensive. Marketplace's Justin Ho has that.
Even though interest rates have been rising, there's still a lot of demand for mortgages, home equity lines of credit, and business loans at Bay State Savings Bank in Massachusetts. CEO Peter Alden says his customers' finances seem pretty healthy.
Our delinquency rates are still low, and our backlog of business is still strong.
But lately, Alden's been thinking that could change in the coming months.
I just have a feeling between, increased costs of everything, that delinquency would have to go up as people are trying to, still put food on the table and, heat their homes for this coming winter and all of that.
One sign that delinquencies could rise, consumers are saving half as much money as they were a year ago. Mayra Rodriguez Valladares with MRV Associates says many people have been dipping into their existing savings.
So they need more cash to pay off credit cards. They need more cash to pay that gasoline, any of their loans. And so what that means is you're going to also start quite likely seeing reductions in deposits at banks.
As a result, Valladares says lenders have been taking steps to make sure they're prepared for more delinquent loans.
And so that means that banks have additional capital that they have to allocate for unexpected losses. And certainly it means that they have to increase their loan loss reserves.
In other words, how much cash banks set aside in case their existing loans go bad.
We are trying to stress test the portfolios, heavily and just run models on what could happen in case the performance of certain types of borrowers decline.
That's Dominik Mjartan, CEO of Optus Bank in South Carolina. He says the bank has been taking a closer look at new borrowers and the loans it's already made.
We are trying to read the tea leaves just like everyone else is.
So far, he says the bank's loan approval rate hasn't really changed much. But even though his customers' balance sheets are still looking strong, he says it's better to prepare when times are good. I'm Justin Ho for Marketplace.